Please read this disclaimer carefully before proceeding further. Hi and welcome to this special report on XAUUSD Gold. We will always start from higher time frame. Why? Because in trading, I always say there are two things. One is context, other one is execution. So what is context? Context is why you want to trade a market. What is the reason? And execution is basically execution or trading on that reason. Okay, now this context comes from higher time frame, multi-time frame analysis. So in our methodology, in our FCP methodology, we always start from higher time frame, highest time frame possible. So here I'm not going to go more than 1 year. So this is 12-month time frame, which is yearly time frame. So right now, this is what has actually happened. If I look at this, so the market created a W pattern, and when W pattern completes, the market starts to fall. This reached a particular level, which is 38.2 of fib level. And if you have been following my analysis, I have been saying that 1680 was my level from here, from 2070 level. Okay, so the market fell down, got supported, went back up. Okay, now we'll come to this in a second. Let's go to 6 months time frame now. So if I go to 6 months time frame, what is happening here is, you see there was a series of these candles, 1 2 3 4 5 candles, right? So the market went up, got rejected by that. We got an engulfing candle. Remember, this is 6 months engulfing candle. That means the market was supposed to be bearish, but what happened? The candle went up here. When this sort of thing happens, this actually happens like when engulfing candle kind of fails. This only happens when the market is trending. Okay, the market trended, engulfing candle, failure, and what usually happens after that is this bearish candle will start to appear in this one. Now we are in the month of June, which is the last month of 6 month time frame, half yearly, which means that by end of this June, this can turn into a bearish candle. Okay, this can turn into a bearish candle, which means that this can be completely bearish up to the lowest point or even lower than that, or it can just become a very small body bearish candle. But the bias says that the market can actually fall down from where it is, from 1851 where it is right now, to at least its open price, because if it goes below that open price, then it will be a bearish candle. So it's quite possible that it will fall from 1851 to 1820. What was the open price? 1828.7, so near about 1829. Okay, so 1851 to 1829 is quite possible by end of this month. Now within a month it can go up and down, but the end of the month can be around 1829. Things can change, so always put things in perspective. So this is one of the possibilities, not exactly like prediction. You do not try to predict, you try to analyze all the scenarios and then plan your execution based on those scenarios. Okay, so that's quite a possibility. Let's go to the 3 month time frame now. So if I go to the 3 month, this is right now, this is turning into one of those candles which actually has engulfed near about 70-80% of the previous candle. So this is also showing me that the market is kind of bearish. All it needs to do is fall down a little bit more. Okay, because we are in the last month of this 3 month candle. So if it falls down below this level of 1829, then it will turn into bearish candle. So again, it still has a little bit of room. Now if I go to the 2 months time frame, 2 months time frame, huge pin bar. Okay, then we have this candle here. Now remember, I'm not sure whether you understand candlestick patterns. Okay, let's not use that. I'll come to those later. So this is a candlestick pattern where we have one bullish candle, and then we have pin bar, huge pin bar, and then bearish candle, which is usually a sign of trend continuation. That means there are more bearish candles expected after that. Okay, we are looking at 2 months time frame, which means this is the current month, right? If this candle does not turn into a bullish candle, then after June and July and August, 2 month candle, that can be bearish too. Okay, so there are more bearish signs here for gold, but things can change, and the market can go up and down on smaller time frames, but on higher time frame it can still fall down ultimately. Okay, if you understand that. So this is what we have here. Let's go to the monthly time frame now. If I go to the monthly time frame, you see, you see what's happening here is the market created an engulfing candle, fell down. Now it got pushed up a little bit, and this month has started a little bullish. Okay, but that does not mean that it cannot fall back down. It can, and especially when it is near about coming to one of these structure levels. Okay, so that is a possibility. And then if you'll also notice that we have a W pattern here. When W pattern completes, the market goes down. It reached this level, but there is an extended target available here at the bottom as well. And if I show you further what can happen on even higher time frame, then this will be something like this. The market came here. Remember, we saw that W pattern here. Oops, sorry. Why does it do that? Okay. We saw this W pattern which got created around 2070. It fell down to 1680. Okay, that fib level of 38.2, created a double bottom here, went back up, but during this time it also created a W pattern, which means that market was supposed to go down. Now it has fallen down to this level. Okay, now let's focus only on this. The market is creating an M pattern. Okay, so if the market keeps on falling like this, okay, it's quite possible that it will target the midpoint here, which is 1680. You'll see that this is actually a double bottom as well. Usually these double bottoms and triple bottoms and double tops and triple tops, these are liquidity areas, because people think that this is strong support, and market makers try to violate that to take this stop losses out. So if it keeps on falling, then 1680 can come back again, and if 1680 is broken, then we can expect a huge fall into near about 1500s or so. Okay, that is a possibility. I'll show you all these levels, but right now I'm trying to explain what can happen on the higher time frame. Okay, so if I go to the weekly time frame here, what do we have? We have the same W pattern that we saw. Okay, this is the one which is now it is showing in much more details, and this is the triple bottom. The market can ultimately violate this because there is a lot of liquidity here. So liquidity, what does that mean? People think like this is double top, so the market violated that to collect the stop losses. Similarly, there was triple top here, market violated that to collect the stop losses. You see, double bottom was here, market violated by little points and then collect the stop losses, but it got turned into triple bottom, which means that market can still come back down below 1680 and violate that, collect the stop losses, and maybe then go back up a little, right? So these are all the liquidity areas. Right now, if we just focus on this part, because we want to find an opportunity, or we want to find out what the market is supposed to do in coming time. Okay, so let's see what is going on. If I bring in the analysis that I've done for you, okay, I will share this chart with you. You'll find this in your area. Okay, these are all the levels which are very, very important. Okay, now 1877 is kind of an important level because this is previous structure, and the market can still go up a little bit and then fall down. But you see what has happened here is that there are several trend lines here which have kind of supported the price, and the market is kind of stuck between them. So this here, we had two trend lines and the market got pushed up. Okay, in that process you will notice that it has created a double bottom. Now going back to my previous point, the market can actually come down to collect the stop loss. So again, another factor in our favor, which is saying that the market could be more bearish than bullish. Okay, and on higher time frame, because we are still looking at weekly time frame. Now market, when it went up, it got stuck into this trend line, and now it started to fall down. So when I go to the daily time frame, this is the trend line. The market went up. Now if I draw a fib level here, sorry, not there, here, you will notice that we have come to 38.2. okay, and we have also in this process created a double top. Okay, that means another liquidity. This is double bottom, another liquidity area. Okay, which means that market can go up beyond this to collect the stop losses and then fall back down. So something like this, and then fall back down like this. So watch out for the levels around this. So what do we have here? Right now the market is consolidating, so you'll have to wait for a clear indication what the market wants to do. Right now this is simply going into consolidation, which I explained in the public analysis as well. So if you want to take long-term trades, like which can last long for more than days or weeks or something like that, you must watch out for 1877.044 and 1830.352. These two levels are very important because between them this is consolidating. Okay, and never ever take any kind of trade without a confirmation. Now what is a confirmation? In our FCB methodology we have 5 confirmation techniques, but you can use like any other technique that you could be comfortable with, an indicator or candlestick pattern or anything, a trend line or whatever, right? We have 5 confirmation techniques, but most common is like candlestick patterns. So if you find a confirmation that okay, market wants to go higher, then you will follow that plan and you will target those bullish targets. If you see that market is giving you confirmation below this line to go short, then you will take that short trade and continue to target those bearish targets. Okay, this is how it should be done. So right now this is in kind of no man's land, and you will notice that if you want to trade on smaller time frames, on 4 hour or 1 hour, then there will be a lot of opportunities, but on high time frame there is not much at the moment, okay, until it breaks to the one side. Okay, this is a W pattern. The market has already kind of one second, the market has not reached the first target here. So let me put this line as the target, okay, and this one. Okay, so if you find a confirmation to the upside, then these are the levels, approximate levels, which market can reach. Take one step at a time. What it means, if you get a confirmation above this, then you will take the long and you will reach this level of 1895.143. If that is also broken, and if you get continuation confirmation, then you will keep holding that trade, or you will take another long trade, and that will approximately reach 1970.370. Remember, we are looking at these approximate levels, so there can be little differences between the real value and the one that you see on this report, because things can change a little. So instead of, for example, instead of 1917.3, it can be 1917, or it can be 1916.9, like very close to each other. So that's also a possibility. If you see a break above this, then you are looking for a movement into 1960 or so. Okay, so these are your bullish targets. If the market starts to fall down from here, then what you have is, if you see a confirmation below 1830.352, then the first level that you should be looking for is actually the test of this previous double bottom. Okay, so let me put that here. So that will be 1786.973. okay, and after that the next level is going to be 1760. Then we have 1729. Okay, and give me just 1 second. Right, so this is your FCP zone here. This is where the market can fall to, and another FCP zone is around here. So that 1700 to 1680, remember we were just talking about, because we have triple bottom there, so that is also a possibility. Okay, so these are the levels. So if you see a confirmation below 1830.352, then it's quite possible that market will try to retest that previous double bottom and try to violate it. So 1786.973 is the next level. After that, if it gets broken, then we are looking for 1760. If that's broken, then we are looking for this FCP zone, which starts at 1743. Okay, and if this FCP zone is broken, then we are looking for a retest into this FCP zone, which starts at around 1700. Okay, so these are all the targets that you have. Now this is the FCP analysis. Okay, let's look at Vata and Visage. Okay, so on Vata and Visage, what we have is that on the monthly time frame, the market has started to turn bearish here. We have red, and then we have red here as well. That means the market is more bearish than bullish, but we are looking at monthly time frame. Refer to the previous analysis that I have just given you. Remember, there are more chances of actually market falling down, and Vata and Visage is also telling us that that's quite a possibility. Now, on the bullish side of things, if the market decides, like if the market changes or something happens, right, it is possible that it can come back up here to test this Vata wave. So what can happen is, if I take a line and put it right there, so 1901 1908, that is quite a possibility if the market starts to go higher. Okay, and remember what we talked about, 1911 19, that area is actually very important as well. So watch out for that. If you see a breakout, then you can take a long trade, and then you can look for those profit targets. Okay, if I go from monthly to weekly here, on weekly time frame, the market reached the profit target here. The white dot shows the profit target. This is the signal which actually appeared. There are two kinds of signal. So one is this red, and then we had an arrow, and once the arrow appeared, there was a white dot which appeared, which was the profit target. So the market fell right from there into this. Now on here, you will see the trend is actually kind of like going up. It is trying to show that market wants to go up, and overall it wants to fall down on monthly. So weekly and monthly, they are kind of like not aligned at the moment. Monthly wants to fall down, weekly wants to go up, and that is why we have little bit of consolidation, a little bit of like an indecision in the market. But you will notice that we have red, so weekly is still bearish. This is still bearish. The trend is kind of little indecision inside the indecision, and it has crossed the midline here, which means that there are more chances of weekly falling down. Okay, now if I go to the daily, on daily time frame, the market is trying to turn into bullish because it wants to go beyond zero, but it has not. But it is bullish because it's blue. But what is happening here is the market is creating this downward movement, then we are up, correction, downward movement, and we have a correction. So this movement is nothing but a correction, and the next movement can be downwards. However, we do not know whether it actually wants to go slightly higher, and that's where that 1911 thing can come in. But if I just pay attention to this water structure right now, then what I will notice that the water curve here can act as, water trend can act as a resistance here. So the market is more expected to be bearish, because now you can see this thing is actually pointing downwards. This channel is pointing downwards. Okay, which means that if you pay attention to monthly wants to go down, weekly is kind of wants to go down, but the trend is upwards. That's why consolidation. Daily wants to go down because the trend is downwards. Okay, so everything is kind of pointing towards the downward move. If I go to the 4-hour time frame, now 4-hour time frame is slightly up, but you see it is kind of like trying to shift the market towards the downside. So it is doing something like this. So more chances of actually falling down. On the signal side of things, if you use what and Visage, then this was the signal here. You see the red signal, and the target was reached. Okay, here bullish signal, target was reached. Okay, so on the smaller time frames we can use like this, but from the analysis point of view, this is what I'm telling you here. Bearish, but market can go back up to test the water wave, which is around 1911 or 1908, near about that. If it actually goes beyond that, then we may have to reanalyze to give you a little bit further details into the targets. Now weekly time frame wants to go down because red here at the bottom, red here. Okay, but this trend is, the channel is moving upwards. That's why there is indecision, so hence consolidation. If I go to the daily time frame, the market may go to 1911 or so, whatever, but it will require a lot of effort to go through this water trend here. water curve here. So there are more chances of actually falling down because the channel is pointing to the downside. Okay, so everything is kind of pointing downside, but as I said, trade what you see, and you should look for the breakout to the upside. If that happens, then go for a long trade, but trade take one step at a time, one level at a time. Do not, like, shoot for moon, right? Don't do that, don't ever do that. Okay, but take one step at a time. If you get a confirmation to the downside on the basically the breakout to the downside, then there are chances that you'll be able to hold that trade for a long period of time. Why? Because higher time frames are telling that market wants to go down. So when higher time frames are in conformation with your lower time frame, and if you take the trade on lower time frame, you will have better chances of success if you hold that trade for a long period of time. So make sure, like, you manage your risk and trade what you see. If you're not feeling comfortable in trading something, do not do anything like that, right? It is not worth your time and money to risk in the market if you're not feeling comfortable with certain trade or certain market condition. Okay, you can always take a break, you can always come back again, you can always have another analysis. Okay, so make sure you manage the risk. I wish you all the best. And if you have any questions, I'll be there available on the Telegram. I will not definitely, like, give you the signals or anything like that, but I will be able to help you with technical questions or something that you may find little difficult in this report, that I'll be able to help you with. Okay, I'll see you in the next update, and I wish you all the best for your trades. Okay. Thank you for watching. Find and follow us on these social media channels.